Has CRA picked up their collection efforts? Is dealing with tax debt different in 2023 than it was in prior years? Lots to discuss. Scott Terrio is here, and it starts right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Scott Terrio is here. Scott, welcome back. We are recording this in March of 2023, which is 3 years since the world shut down. And you will recall very specifically, it was March 17th, I think, 2020.
St. Patrick's Day 2020 was our last day in the office.
Last day in the office. You and I were in our office at Yonge and King that day, and I believe we recorded a podcast that day too. When the world shut down, the federal government created CERB, the Canada Emergency Response Benefit. And before we get started, I want to explain my thoughts on CERB because I know what's going to happen as soon as this podcast is published. A bunch of people are going to leave comments or tag me on Twitter, and they're going to tell me why they think CERB was good or bad. Now, they can't hassle you on Twitter because, of course, you made the smart decision to close your account. So good for you.
The hell out.
You're gone, man. Yeah. But since that means people will be contacting me, I want to give my thoughts. So
direct all your complaints to Doug.
Exactly. You're right. That's exactly what's going to happen. So there's two opposite ends of the spectrum here. On the one end, people say the government shut down the economy, so they had to give people money to survive. Okay, that makes sense. On the other side, people agree, but they say, hey, you should have read the rules first to make sure you were eligible. So if the government is asking you to pay back CERB, it's your fault. Okay, well, I think we should all think back to that, March, April of 2020 period. We didn't know if the world would end. We knew many people couldn't work and they needed money to pay for rent and buy food. So it's obvious why so many people got CERB. It's also true that the government did not fully explain the rules. And many of the agents at CRA and Service Canada who were working the phone lines didn't know exactly how the world worked or how the rules worked. So it's not surprising that some people thought they were eligible for CERB and some weren't. So on today's podcast, we're going to talk about tax debt, and some of that tax debt is the result of CERB, and it is what it is. I'm not here to judge whether you should have got it or shouldn't have, and I'm not going to give an opinion on whether or not the government should have done a better job of explaining the rules. I think they should have, but hey, today we're just going to deal with
which you just did,
which I just did. So today we're just going to deal with the implications. So with that background, I would like you to tell the listener why you think 2023 and particularly tax debt people are dealing with is different now than it has been in prior years.
Right. And it is very different in 2023 than even 2022, actually, or certainly the first half of 2022. We started to notice a big change, I think, in around summer last year, ramped up in the fall from how CRA was pursuing people and what people were telling us when they were either new clients or existing clients about CRA, mostly new clients, because once they're filed, they're not supposed to hear much from anybody. But we had this pandemic, right? We had this, once in a lifetime, hopefully, thing where everything closed down for what at the time nobody, I don't know. I mean, I thought it might be 6 months. Well, typical accurate prediction from me. But it's very different because CRA were put in a very different position than they're ever in. At the time, CRA were tasked with shoveling emergency benefit money out the door, and did they shovel? And so there's only so many CRA people, and at the time they were working from home. So what that meant was that we found out over time was that they had very restricted access to things because CRA has a very high level of security when it comes to people's information and stuff. And so if you're a CRA person who suddenly went home on March 17th, 2020, not only did your job change to working on getting emergency benefits out the door in a hurry to respond to the COVID situation, but you also didn't have access to everything you needed access to. And so things slowed down and they got bogged down. And so this is very different now because after 2 or 3 years of this, the switch was flipped. And so, somebody in the government said to CRA, okay, time to go start hauling some of it back in, guys. And so CRA reverted back to what is it, more natural mode for them, but I think much more aggressively than they ever are typically, because they're in collection mode now. And, all those emergency benefits that went out the door, first of all, the initial CERB was paid in gross dollars. And so any of the 9 million Canadians who got CERB in the first 6 months of COVID got it in gross and found out later that, they owed tax on it because it wasn't deducted at source. So there was that issue. And then there was the emergency benefits eligibility, and there was the business emergency benefits. So now CRA are basically hauling the money back in, and we've never been in this kind of situation before.
Yeah, and just to put some context to that. So you said that around 9 million Canadians received CERB in 2020. That's true.
Or we're out of work. 9 million Canadians went out of work.
Well, no, 9 million Canadians received CERB.
Yeah, well, okay.
So obviously, because they were,
that's a huge amount.
Yeah, it's a massive amount. I mean, and that doesn't mean they all got it for the full term. Some of them may have only gotten $500, but, and I'll put a link to this in the show notes.
Yeah, like if your job rematerialized in 2 months, well, okay, so you probably gave up the CERB knowing that I better not take this now.
Yeah, and the CRA had an excellent site that showed, or page that showed all the different stats. That page no longer exists. So what I've done is I've linked to the Wayback Internet Archive machine to pull it back. It might exist somewhere else. I couldn't find it. But according to the most recent data I could find, 9 million Canadians received CERB. And there's only 35 million of us or whatever. So it's a huge percentage.
36, 37. So that's a huge amount, especially of the adult tax paying.
Because a bunch of them are kids or retired. And the total amount that was paid out was somewhere around $80 billion. So that's not an insignificant number. And then CERB ended, as you said. CRB came in 2021, which was part of EI. There were about 2.3 million unique applicants, so not as many as CERB because the economy was somewhat more open and the rules were a little more restrictive. They paid out $28 billion under that program. So we're talking about $100 billion that was paid out. So it's not surprising that CRA and I guess indirectly Service Canada is saying, hey, look, I mean, if there was money that was paid and you weren't eligible, then we want that money back.
Yeah, and then there were the business loans, the CEBA, the Qs, the KEPRA, the KIPRA.
Yeah, and that was even more money. So, many more tens of billions of dollars on top of that. And you made the key point there. With CERB, there was no taxes withheld. So they gave you $500 a week, but you had to include that $500 in your income. So when you filed your taxes for 2020, which you did sometime in 2021, it's like, I owe more than I thought. With CRB through EI, there was 10% tax withholding. But again, if you were in a higher than a 10% tax bracket, you ended up owing money. And just a final bit of stats here. And again, I'll put a link to this because we've talked about it before, our Joe Detter study. So in 2020, our average client had average tax debt of around $5,200. In 2022, it was $8,100.
That's a 40% increase.
That's 56%, actually. I did the math.
Okay.
56% increase in tax debt from 2020 to 2022. And that is our average client and their average debt. Obviously, a lot of people don't owe any taxes, which means a whole bunch of people owe a lot more. So,
but it's a good indicator, right? It's a very good measure, right? If it, we've never seen that before. So you asked me what's different in 2023. Well, that's
it.
That's a big one.
That's a huge one. And so, so I think there's two elements to the CERB. One is you got it and you weren't eligible. And then the bigger element is, 9 million people got it. It was included in their income in 2020. And as a result, they may have owed more in taxes than they thought. And then 2021 came along and, guess what? You've got this other benefit that is rolling forward.
And there's always going to be a portion of those people who got CERB who already had tax debt. Right? So if you owed them 10 or 12 grand from before the pandemic, and now you owe them another 4 or 5 grand, and you have all this consumer debt building in the background because you weren't working, so you were using your debt to survive, then that's kind of the unique situation.
So you kind of addressed with CRA, but let's kind of delve into that a little bit. So you're right. In terms of the current world, there was a lot of money, stimulus, whatever you want to call it, which of course CERB and CRB have now ended here in 2023. We've got high interest rates, although given the results, what's happened in March, who knows what's going to happen. We've obviously had high inflation for a long time. And as you said, CRA was working from home, and still most of their agents are working from home most of the time. Some of them are back in the office 1 or 2 days a week. And as a result, as you said, it's kind of hard to collect and send out a requirement to pay notice if you don't have access to a printer.
Mm-hmm.
And so,
or in CRA's case, a fax machine.
A fax machine, right. They don't use email, which could be another podcast, but okay.
It's always 1996 in
right.
CRA.
Well, and I partially get it. I mean, we did the podcast first week of March about, fraud. And so, okay, I get an email from CRA. I don't know if it's real. I click on the link. But yes, it is 2023. You would think there'd be some way to mitigate that. But so, okay, what else are you seeing from the CRA point of view then? What are you seeing? More collection activity, different collection activity? What are you seeing?
Yes. CRA flipped back into their collection mode whenever it was last year. And, I think they're kind of making up for lost time in a way. Anybody who's a new client to us in the last 6 to 12 months who owes CRA has reported, any kind of actions taken, frozen bank accounts, wages garnished, letters sent saying, like I saw a letter recently saying, we've registered in the court and we're thinking about liening your house. I've never seen that before because typically CRA just sends a letter to the land registry office and says, put a lien, and they don't even tell you half the time. So you find out later. So that's different. Them actually, and I think what they're trying to do is they're trying to get people to pay, because if you have a lien on your house, you will pay eventually, but it takes, 10 or 20 years by the time you sell the house, and it comes off as one of the disbursements from the lawyer. So it's smart on their part, I guess, because people will freak out, right, and they'll pay them, right? And so the kind of stuff we're seeing is this, aggressive, wage garnishes and, frozen bank accounts. There's a lot that CRA can do, and we haven't seen all of it yet, but that's, as we talk to more people, we will discover exactly where CRA is at mentally on their aggression level for collections.
Yeah, and if I had to characterize it, it's kind of like turning up a dial. So in 2020, there was no collections happening because nobody was working. Yeah. There was no point. 2021, basically the same. 2022, okay, it started to get a little more aggressive. What they started by doing was sending out the soft collection letter. Hey, we think you might owe. Can you please send us the money? We're not going to call you or do anything, but can you do something?
Yeah, CRA carves out, segments, right? And so that there's all these people that owe money. Well, they can't go after them all at once. And so what they do is there must be an algorithm or something that tells them, okay, I want you to go after, this type of profile of person that owes tax. And you're right. They do that by, sending out a letter first, because if you send a letter out, which doesn't cost you a whole lot of time or effort or money, you'll get a certain amount of payments back. They know this. And so, it is like turning up the heat. So then there's a next stage. A few months later, they kind of see, well, what did we get from this? And then we crank it up a little bit more. So whoever runs, risk or collection at CRA says, well, now let's go after this group, or let's broaden the sweep here. And so I think that's what we're seeing, is it's gradually getting turned up, the heat.
Yeah, the first letter that went out, I think, was around August of 2022. And I think exactly the way you described it, they ran the algorithm to say, okay, in order to get CERB, you had to have $5,000 of income or more in the previous period. Let's run a list of everybody who had less than 5,000 and send them a list. And let's get them to prove that they actually did have the income. And so that was kind of the first easy swath. And then it's, okay, who hasn't filed their taxes, who owes money, whatever, and they just kind of go down the list. Well, now here we are in March of 2023. Over the next month, everyone's supposed to have filed their taxes, obviously by the end of April. So now whatever taxes you owed for 2020 and 2021 and now 2022, if you haven't gotten enough refunds to counterbalance what you owed in the past, you've now got potentially a 3-year tax problem. And as a result, I mean, that's kind of messing with the psyche of people who are calling then, right?
Yeah. Well, it is. And there's other factors out there that are working on people's psyches here too, right? We were alluding to, increased credit card debt, because a whole bunch of people paid their credit card debts off during COVID, right? Because they were home and their expenses were down. So we saw that. And then on whatever podcast it was you did with Ted very wisely said, we'll be right back to 90 billion again by December. Well, we were there by September. So people have run their credit cards back up. So a lot of this is a perfect storm situation in terms of indebted people, right? You got record interest rate rises in a short period of time too. Like, they didn't take 2 years to raise rates. They took like less than a year. And you got rampant inflation, which is probably generational. And then you got people who, the 3 years of getting used to getting almost no collection calls of any kind because the courts were largely closed down. And so lenders didn't bother going after people because if 9 million people aren't working, we can't garnish their wages. So it also instilled a sense of complacency or untouchability, I guess, without getting too dramatic about it, in people. And now we're hearing about that stuff, right? Is that all of a sudden they're getting phone calls and texts and emails and letters like crazy because lenders are also making up for lost time, just like CRA.
Well, and if you owe money to credit cards, payday loans, bank loans, and CRA, who's the first person calling you? Well, it's not CRA. They're the last person calling you. I mean, you miss your payday loan payment by a day, they're calling you. If you haven't filed your taxes for a year, you don't hear from CRA right now.
Yeah, there's an element of how much this hurts you, right? And so if you don't pay CRA back, well, eventually they'll hurt you, but if you don't pay your credit card or your payday lenders or whatever, then those things are, especially your mortgage or your car loan, where it's a secured debt and they can actually, repossess the thing. So yeah, there's also a scale here of who people will pay back. And, you're going to pay back the ones that are going to hurt you sooner, which is, commercial lenders, right? And CRA is probably going to be last on that list because you think, well, they'll get me eventually, but CRA are really starting to ramp up. So I think a lot of people are going to have a bit of a shock at the breadth and the depth of CRA's powers.
Well, so let's talk about that then. What is the breadth and the depth of CRA's powers? So if I owe money on my credit card, they can phone me, they can send me to collections. CRA doesn't send you to collections. What can they do? What do they do?
Well, they can do a whole host of things. They can freeze your bank account. They can seize assets. They can put liens on your property. They can withhold tax refunds. Or other benefits, like as an offset in the Bank Act. They can garnish your wages. They can raise a spousal assessment against your spouse. That's a nice little trick. So if I owe CRA $50,000 and I don't know, my wife and I have a house that we own together, they can, if I don't pay them and they can't get me, say I'm self-employed or I'm not working, whatever, CRA can raise a spousal assessment. They can say, okay, we'll go after your wife.
Yeah,
they can.
Yeah.
Sorry, go ahead.
Yeah, they can't go after your wife for your taxes, but if you own a house together and they put a lien on the house, well, then kind of
it's indirect, right?
It's indirect,
but it's still a huge argument in your house.
Yes, I would think so.
At the very least.
And you're right. If you're self-employed and have your own business and do some income splitting with your spouse, then your spouse is kind of roped into it. I think the two big...
and in general, they can reassess, right? So like they can assess your tax return, then they can reassess it later if they think something else is up. So that's 7 examples of what CRA can do to you. That's pretty severe.
Yeah, and the two big ones you had on that list, the most common ones would be garnishing your wages.
Mm-hmm.
And so...
and withholding tax refunds.
They don't give you, you don't get the climate action incentive.
Those are the two most typical actions that we see. That's sort of the easiest for CRA.
Definitely the easiest. The scariest one is having your bank account frozen because now I can't operate. But CRA doesn't know where you work when you first start a job, but once you get a T4 slip, of course, CRA knows where you work. So I find that it's this time of year, the spring, when CRA now has everyone's tax or T4 slip on file. Now that job you started last year, they now know where it is. So if you're not
anybody who changed jobs in the last 12 months, CRA is starting to find that out now, right? In the next, it's March now, it'll be April, May, June as people do taxes either on time or late. And then CRA will have another list that their algorithm will say, all the people who you found out are working who owe us money, go garnish their wages. Yep.
And your T4 is in their computer now. So they already know it.
Yeah. So your grace period is ending.
Yeah, that's right. That's exactly right.
In other words.
So I want to talk about CEBA loans, but before I do, is there anything else you would like to throw in there regarding either CERB or personal income taxes or anything that we haven't touched on there?
Not that we haven't touched on. I will mention, though, that the pandemic was particularly hard on certain groups of people. Like basically anybody who either touched or came into contact with people were were hammered. So you and I have spent, and our firm has spent the last 2 years, 3 years talking to gym owners and restaurant people and bars and tattoo artists and massage therapists and chiropractors, like anybody who was physically in contact. And it's a pretty huge group of people, really, especially the service industry. And so those people have been particularly hammered, and even doubly so if they are self-employed, because not only was it their personal, but it's their business that's been crushed, and they've been tapping into sources of funding necessary for them to stay afloat. So either not remitting HST or payroll deductions to CRA, or they've been tapping lines of credit from their lenders or whatever. So, the scale of that is pretty big, and I'm not sure how many the average, the general public would know that without doing what we do, which is meeting with people that tell us this stuff, right? So
yeah, if you work from home, you're a computer guy and you work from home, and you're not maybe a little bit more insulated from how this has impacted people, because like, well, I kept getting my paycheck, it didn't affect me at all. That wasn't the case for a bunch of people. So
yeah, we've got a front row seat for all that
right.
stuff, and so I think it's important for people to understand, how certain people in certain industries really got crushed here.
Well, and it's certainly in downtown Toronto, nowhere near back to even close to where it was. No. You and I used to be in the office. You were there 5 days a week, and meeting 5 or 10 people a day. And now we're still meeting with lots of people, but the vast majority of those meetings are over phone or over Zoom. You and I are physically in the office maybe a day a week and seeing a couple of people. So it's still totally different now.
Yeah, lots of virtual work,
right?
But yeah, there seems to have been a real mentality change for people in terms of spending 3 years using Zoom and using Teams and using, online versions of communication with people that everybody got used to. And I wonder how long it's going to take us to go back to the old ways, or if we ever do.
Yeah, I don't think we ever will, but
probably not.
I don't know. I mean, who knows? So, okay, let's talk about CEBA loans very briefly, and then I want to get into practical advice. So CEBA loans, and I forget what it stands for, the Canadian Emergency Business Account or whatever it was.
Emergency benefit something.
There you go. So somebody can
Doesn't matter.
Correct me on Twitter because I don't know what CEBA stands for, but it was pretty simple. If you operated a business or were self-employed as a business person, you could apply for a $40,000 loan, which ended up getting increased to a $60,000 loan. And the rule was, so long as, and the rules have changed, but at the moment, the rule is so long as you pay it back before the end of December 2023, so many months in the future still, then you get a partial forgiveness of the loan, easy peasy, you're done. So this has not hit yet because the loans are not due yet. Are you getting calls from people who operated businesses or were self-employed and got CEBA loans and don't think they'll be able to pay them back?
Yes, I have. And not just like recently, but in the last 6 to 8 months, but they're very aware of it because it's a big amount of money, and they're freaking out because they don't know what you and I know about, how businesses work and how versus personal debt. And so they're freaking out because they're saying, well, okay, look, if I don't pay this back by December 31st, the forgiveness of 33% or 20 grand is going to go away. But CEBA loans were not personally guaranteed. They were not required by CRA for you to sign personally. It's business only. And so if you have a corporation and you owe CEBA and you owe all this other stuff, maybe HST and payroll, maybe you got 100 grand in credit cards and business lines of credit, that kind of thing, you might be in less trouble than you thought. If you call us, we will advise you what your rights are, what you can do, what you can't do, because CRA can't come after you personally for those things. So you might owe 60 grand, but the company owes 60 grand, not you.
Yeah. And
if you're a corporation, you're legally separate.
Right. And this is a key point. So if you operated through a corporation. Yeah. So, and there's lots of people, I'm an IT professional. I have my own corporation. I'm a framer, a construction worker, whatever. I've got my own corporation. If it was the corporation that borrowed the CEBA loan, it is the corporation that's liable for it. Yeah. And that's different than if the corporation owes GST or HST. As a director of the corporation, you're personally liable for that too. But with the CEBA loan, you are not personally You did not sign a personal guarantee. Now, obviously, if your corporation is still operating and making lots of money, then the corporation is still liable for it. But what we're seeing is people have said, you know what, I'm just shutting down my corporation then because it's no longer viable. I'm going to get a job as an employee. They're based on the documents we've seen, they cannot come after you personally if it was a corporation. Now, if you were self-employed, as a sole proprietor, well, then you were the one who borrowed it. There was no corporation. So yes, you are personally liable for it because you're the one who signed for the CEBA loan. So it will depend on were you operating through a corporation or not. Is the corporation still owing? I think with respect to CEBA loans, my advice would be give us a call. We'll take a look at the paperwork. We'll tell you if you are personally liable or not. And you also hit on the other key point. What are your other debts? Because if you got a bunch of other debts too, then everything probably has to be dealt with all at the same time. I think the concluding comment on that is this isn't going to be the big story until next year when the loans are officially due.
Yeah. And I mean, if you're sole proprietor, you owe it, don't you?
Yeah, right? It's your,
because there's no legal separation. So I think
right.
The way to think about this is, okay, if you owe CEBA and there's a big amount coming due on December 31st, am I corporate or am I a sole proprietor? Number one, that's the big dividing point, I think. And so, yeah, if you, like you said, if you call us, we can walk you through all of that. You may not have to file anything. I've spoken to lots of business owners where I've just told them, okay, here's your exact situation. Here's what you owe. Here's what here's what the situation your business is in. And maybe it makes sense for you to close it down and not file anything, or maybe it makes sense to just wrap it all up and put it into something else, start something new, or as you said, go on payroll with somebody else. So each situation is unique. And I know we always say that, but in this case, particularly making sure people understand what they're talking about or what they're dealing with here is important, because we get panicked calls, people saying, I owe all this. And we say, well, no, you're incorporated. The business owes it. And you didn't personally guarantee it because CRA didn't require that. So again, it boils down to a specific situation, right? Yeah.
And you got to look through the numbers because every situation is different. So again, I don't want people on Twitter coming after me. Again, they can't come after you. They can only come after me saying, well, you said I didn't have to pay the loan back. No, that's not what we said at all.
It's almost like I incorporated.
Yes, exactly. You've gotten protection.
I have legal separation.
You have legal separation. So yeah, what we are saying is consult a professional to go through to make sure you fully understand what your obligations are. Okay, so final question. Practical advice.
Yeah.
So people who are dealing with tax debt that may be from 2 or 3 years ago, maybe current, overall, what is your general advice to people in that situation?
Got lots of good advice here. So if for those who owe personal CRA debt for whatever reason in 2023-24, whether it's old tax debt plus CERB or whatever, communicate with CRA. They are far less likely to take action against you if they know you're a real human. To them, because instead of a 9-digit number, your SIN number, because they're humans too. They're doing thankless jobs. And it's amazing when you actually talk to CRA, how the tone changes. That's number one. So communicate them, talk to them, tell them, I know what's going on. I explain your situation, tell them what you're doing. Bring your filings up to date. So if you haven't filed since 2020, CRA aren't monsters. They're great box checkers, though. Okay, I tell people this all the time. They're largely accountants, and so they like checklists and boxes ticked. And so you'd be surprised how happy you can make CRA. If you owe them $100,000 and you file your last 3 years taxes, they'll probably back off you for a bit. So, and that's something you can do, cheaply and fairly easily to kind of get them to turn down the heat a bit. So they like rules to be followed, and they like people that have their filings current, and it doesn't take much for you to at least do that. So you throw them a bone. We've had people where I had someone who owed tax debt and filed with us a month or two ago, and CRA sent us in a no vote, but they didn't say what they want. They didn't say, well, here's our counteroffer. Well, I finally got a hold of the guy after 2 weeks, and he said, yeah, we'd like her to file her 2021 taxes. I'm like, well, why didn't you put that in the thing? Well, CRA also have a lot of restrictions. We were mentioning them earlier, like the work from home stuff and also the security. So they can only tell you so much. So again, talk to them, tell them what's going on, and bring your filings up to date at least. And then if you're in a position, so for those who owe business debt, let's say, or even personal actually, if you can talk to them, CRA will give you 12 months to pay something. They're not very creative. It's 12 months. So if you owe them $10,000, divide that by 12, you might be able to pay them. And at least they know that you're not just trying to evade them. And if you owe business debt and you've owed them HST or payroll remittances, figure out how much you owe, see what they'll take. Because if they can put you down into the next echelon of their kind of attack group, then you're probably going to buy yourself some time that's critical for you to be able to actually pay them back. So goodwill with CRA by talking to them, bring your filings up to date at least. If you're not paying them monthly or quarterly, try to get on a program, and you can talk to your accountant about how to do that. They'll help you out. So you can also change banks, and this is a bit more dramatic, but you can go to a credit union, okay? Because, CRA knows where the big 5 banks are. So if you bank at, Royal, and you leave Royal, CRA will probably send letters to TD and BMO and Scotia, whatever, say, is he there? They won't do that with credit unions because there's thousands of them. So maybe you can kind of keep your business functioning for a while if you go and bank at a credit union you only need 6 months or whatever to make enough revenue to pay CRA back. So there's ways you can do this. The best thing to do is phone us and we'll tell you all this stuff, okay, in much more detail than that, and we'll actually tailor it to your situation. But those are the things I think that is the general practical advice that I would give people that owe tax debt right now. Yep,
and I totally agree with all of that. I don't know if there's thousands of credit unions, but I get your point. I think it's a good idea to have a second bank account. If all of your banking is done through Silicon Valley Bank, and I'm just making up a name of a bank, it's not a real thing or anything, but if all your banking is done through one bank and something goes wrong with that bank, then you got a problem. So having a second bank is a good idea. So
timely, topical,
very timely. Scott, thank you very much for all that advice. I will summarize exactly what you said. Number one, communicate with CRA. If they haven't heard from you for years, then that's when they are more likely to go freezing bank accounts. If you haven't filed your taxes, they have to get your attention.
Yeah, they're mad at you.
You know a good way to do that? Freeze your bank account. So let them know what's going on. Keep your filings up to date. You got to do it. Every other Canadian does. So make sure you're filing your tax returns on time. If you have HST returns because you're self-employed, get that done too. And if you owe them a chunk of money, well, if you're sending the money every month or every 2 weeks, then you're right. They drop you down to the lower echelon. They're not as aggressive with their collection activity.
You're off of that list.
That's right. You're on
a lesser list.
A lesser list. But if you have so much debt that there's no way you're going to be able to pay it back, including to CRA or whoever else, then you're right. You want to sit down with a licensed insolvency trustee. We can walk you through what the different options are and make an overall plan. So that makes perfect sense. Scott, thanks very much for being here today.
Thank you, sir.
Lots of practical advice there. I will put links in the show notes on YouTube to everything we've talked about so you can fact check us and do your own research for yourself. And again, if you've got these kind of debt problems, you want to reach out to a professional. That is our show for today. Thanks for listening. For Scott Terrio, I'm Doug Hoyes. That was Debt Free in 30.